Excellent. So what we've been talking about is the logo that I have behind me. It's the Federal Deposit Insurance Corporation. So I've had students guess what is the purpose of a Federal Deposit Insurance Corporation. Patrick said they insure deposits in banks. Rosario said they oversee situations, and that's all true. I want to hear from some other students. What else could the Federal Deposit Insurance Corporation, also known as the FDIC, I'm going to put that in the chat, the FDIC. You might have seen that before. What do they do? What's their purpose?
I think the teacher is do the regulation of all insurance corporation.
That's also part of the regulation. I'm going to use that word. What does it mean? What is regulation? Because we have a lot of really strong vocabulary words here, but I want to see if everybody can understand what they really mean and how we use them. What is regulation?
Rules. The rules.
They can create law.
Yes, rules and laws.
Rules.
That's a synonym. Creating laws,
to regulate the system.
Yes.
Regulating the system. What are some ways that a system can be regulated? Rules. So, okay, let's get a good example.
Lawyer.
Let's say I want to buy a car. Can I just walk into a bank and say, give me $15,000, please? And then I'll walk out in 10 minutes.
No. Do you have an what can I say?
Credit first.
Yeah, these are what you're talking about as rules. They have to run your credit.
Yeah.
Excellent. So next, then there'll be another banking workshop, which will go into credit.
Yeah.
Now, the FDIC, they really don't regulate the investors, the customers, the people who put their money in the banks. They ensure that when our money goes into a bank, it's not going to disappear. And I want you to look at the year 1933.
It's very old.
Anybody know what was happening in the US and around much of the world in the 1930s?
That's a crash?
Crash. That's a word. What does it mean? Crash.
Crash. Down. The economy is down.
Yes, there was an economic problem. You're right. It was called a stock market crash.
Yeah.
But what was happening to banks in the 1930s? I'm going to show you exactly what was happening. Now I'm going to change my background to give you a little bit of a history lesson. Not a lot, but a little history lesson. This is a photograph from New York circa 1929, the year of the stock market crash. What's happening behind
everybody want to pick up your money.
So Patrick says everybody wants to take out their money.
Yeah.
What let's get some other observations. What do you think is happening here? I want to hear from somebody who hasn't shared yet. Rosa, how are you this morning?
I'm good, thank you.
Excellent. So in this picture behind me, what do you think is happening?
Like he said, people just want to retire their money.
The money lost the value.
Losing the value.
So money lost its value. Okay. So everybody's trying to run to the bank to get their money out.
Yeah.
At the same time.
Teacher. Maybe it's like
yes.
the some people create like a pyramid. I think there's like It's the same in my country,
Greece or Armenia?
Albania.
Albania, I'm sorry, Albania.
1997, was some
Mhm.
people create like a pyramid, like bank, small
Mhm.
banks, and they took the money. All the people go there to put all the money, and the people who create like those banks took the money, or the state, the department state took the money, and the people
No, I understand what you're saying. So they created a
yeah,
bank, small banks. They got people's money.
There was some problem in Haiti too, teacher.
Well,
But okay.
oh,
Okay.
hang on 1 second. No, keep going. And then Patrick, Bruno, so tell what happened when people put their money in these small banks in Armenia.
yeah.
What happened?
All the money, I don't know, I was younger that year, but in my country, it was very bad. The people want to took the money, but the money disappeared.
Aha.
But it's like the government and the small banks like that, it was together that took the money, and the president is like the spoke with the in the TV, said like the money they are safe like that, but no.
I know exactly what you mean. Let me clarify the situation.
It's the same here in Albania. It's the same here. That year. I don't know.
No, you did a great
right.
job. No, perfect. You did a great job.
Because it's the same. What happened in my country?
The situation, you said 1997 in Albania?
Yeah, in Albania.
So small banks got people to put money into their banks, and then they disappeared when people wanted to get their money out. Sorry, we don't have your money. Nothing we can do. And the government said, sorry, we don't, this is, you put the money in, that's your problem. Nothing we could do.
Wow.
So now I want to,
a lot of people lose the money.
Is the same situation?
It's beautiful because I'm not beautiful. It's tragic. People putting all their hard-earned money somewhere, and the money disappears, and there's nothing you can do about it. That's what happened in this country. And the people here in this picture behind me are running to get the money, and there's no regulation. That's the word that Rosario was using. Banks could operate independently. The government didn't have laws to police the banks. They could take somebody's money and then just not give it back. Sorry.
Yes.
We do. So the banks are investing in, stocks, and these companies are lying about their gains. Companies that aren't making money say they make money. Banks are putting people's money into these, stocks. Stock market crashes, no money for the banks. Banks close, people have nothing. So
they are in panic.
Yeah.
Good morning,
Good
morning.
The bad things that
Now let's go to Patrick. Patrick, thank you for waiting. That was I'm sorry I asked you which country because I know you lived in Greece. Bruna you've lived in several countries. You've lived in Greece. That's why I asked, was this in Greece or Albania?
But I don't know in Greece, but I know my country because I was younger.
Right.
And
so
the situation that year it was very bad. The people took
I want to ask everybody.
Come on.
Yeah. Does anybody have a similar story from their country? So Bruna shared Albania, 1997. This is the US in 1929.
Same situation.
Where people can't trust banks.
Yeah.
when the people can't trust the banks, what do? Well, in this country, I'm going to go back to my former, I'm going to minimize this and go back to I'm trying to switch my background for the people who just joined us.
Teacher, in my country
Uh-huh.
had something similar.
Tell us, this is the Dominican Republic, yes?
Yes.
All right, tell us about the situation. Can you give a date, Belkis?
See?
I'm not going to change my background. I'll keep this background, but for people who just joined us, we learned the FDIC. The FDIC in this country was created basically to stop this from happening because Americans stopped trusting banks. And when Americans were hiding their own money at home, not putting any money in the bank, basically the economy couldn't work. People couldn't go to a bank to get a loan to start a business. People can't start a business. Nobody has a job. So the FDIC was created during the Great Depression to get Americans to trust banks. But it's not an American problem. Around the world, people have stopped trusting banks. And then the government has to find a way to get people to trust their money to local banks again. So Bruna gave a great story about Armenia. Patrick started to tell a story about, were you talking about Haiti in 1982, Patrick?
Yeah, there is some similar problem because in Haiti we got two kind of money. We have good, we have dollar. Okay.
Okay. Oh, goods like barter stuff.
Yeah.
Like
yeah. Exactly. Exactly.
Bartering for things people need. How about this? Let's hear from Patrick. Then we'll hear from your neighbor in the Dominican Republic, Belkis, on the other side of the island.
Okay.
And then let's hear from a few other people let's get many stories from many countries today.
Yeah.
Patrick, then Belkis. Go ahead, Patrick.
Yeah. The government want to convert the good and dollar.
Okay.
You know,
How would
everybody.
they do that? Yeah. How do you convert goods into dollars?
Because the government want to use one kind of money in the economy, not two.
Right.
Okay.
Can you give an example of how people use goods?
Okay. You can make in the bank you can make you can have two kind of account, and good account and dollar account.
Okay.
Okay. The government want to consider one account, not dollar for, only good. So we go to transform good, dollar and good. You know what I mean?
I think I understand, but I want to make sure that everybody else is following you. What are goods?
Goods
Can you
is
give an
the
example of goods?
Goods.
Your money?
That's the Haitian money.
It's a
okay.
currency.
Yeah, exactly.
Goods. Not to be confused with goods and services. So he's talking about
good.
US
Yes,
dollars
money.
versus
Yeah,
the Haitian currency. Okay.
GOURDE. Good.
Good.
OU.
Yeah.
Okay.
Good.
It's
Yeah.
Every country has
Their own currency. Okay.
We
So
have
switching
two
from
kind
good
of exactly to dollar.
US dollar.
Yeah,
Okay.
exactly.
I get it.
Everybody don't want to convert the good in dollar. So at the same time, everybody want to pick out the money in the bank.
So like this.
Like
behind
this. Yeah.
Wow. Were you old enough to remember this? Or is this before you were born?
Before. I think 2019. At the end in 2019.
Oh, okay. I thought you said 1982. That's why I was
Yeah.
wondering if you were old enough. You mentioned 1982.
Yeah.
All right. Let's hear from Belkis. Tell us about the DR. Belkis, when did something like this happen in the Dominican Republic?
It's something similar with the Banco Baninter, with the bank Baninter in my country, but it's happening in 2033.
15, okay.
Yes, 17 million of people had a problem with their money. But the bank was private.
So the last word again, please. What was that?
How do you say privado?
Private.
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 It's a bank.
Oh, so not government, private. Private companies can do what they want.
Yes,
Private banks
private
can
bank.
operate. I get it. Yes, a private bank.
Yes,
Oh, okay.
but I don't know remember what happened with their money. But I only know that he was broken.
So private banks took people's money and they wanted to get their money back. And sorry, nothing we could do.
Yes, the percent this bank is like the percent you took you put the money is higher from the bank of Albania in my country. And you
Okay.
put the money, you take the percent higher.
Now with what Bruna is talking about, now we can go into some of the vocabulary. I was thinking about playing a game with the vocabulary, but I think it's better just to have a conversation. I'm going to start sharing my screen to go over some of these vocabulary words that I put into Google Classroom. When Bruna talks about a percent being higher,
Yeah.
let's think about a situation. Yeah, I was going to play a game, a vocabulary game, but I think it's better I'll just keep the blank screen right here. So if we're talking about a situation where independent banks operate outside of the government regulations, that means there is this word, risk.
Yeah.
So I have my money. If I put it into this bank, I put it into this bank, and this bank is following government regulation. I'm just putting GOV for government. In this country, we have the FDIC. That's an insurance company.
Okay.
If the bank is FDIC insured, that's telling people what?
It's
They can
protect. They have protection.
Exactly. If you put your money here, it's not going to disappear.
Yes.
But what Bruna said is that this is, and Bruna and Belkis said, this bank over here says, no. We've got our own bank. It is private or independent. Now, what's a reason, and let's use the word risk, why would anybody want to take their money and put it in this bank, which is not protected by the government, instead of this bank? What's a reason somebody says, you know what? I think I'm going to take that risk and put my money over there. Why would somebody do that?
They might offer better.
The interest is higher.
Yes, it's Rosa and
Interest,
Belkis were talking at the same time, but I think you're saying the same thing. Keep going, Rosa. What are you saying, Rosa?
I said that they might offer better interest, higher interest.
Yes, there it is. So there's that vocabulary word, higher interest.
Interest, yeah.
Beautiful. So you're using the vocabulary word. Who could tell me what is interest? So ding, 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 gold star for both Rosa and Bruna. What is interest?
It's
Maybe
what
it's
do
a
you earn?
percent.
It's
Oh,
what
you
do you
want to
earn
pay-
when you
Ro-
put
Rosario.
your money in a bank. If you have a
Yes,
saving account, you can win interest in your money. Do
Mhm.
you have?
exactly. Say a savings account. So there's another
Mhm.
word right there, account,
Additional.
account. So
Teacher,
now,
you can say
yes,
additional money. You can say additional money you can get on your account.
well, these are different services a bank offers. Let's say I have money. I could put my money in a bank. I could go buy stuff with it. I could dig a hole in the ground. I could put my money in the blender and drink it. What, I don't know, it's my money. What is a reason I would say I'm going to put my money here and not here? The reason is interest. I want my money
Interest,
to
yes.
grow.
Oh, yeah.
Teacher,
Most
is that
people
a
want that.
commission? Is a commission?
Not commission.
Not
Commission is
commission.
totally different. It's with
Yeah.
commission is with a sales
That's
business.
that's a
It's-
word too often.
Mm.
Yeah.
Commission is in sales, and you work in sales, so I know why you're thinking of commission.
Thank you.
So we all want to put our money somewhere where we can make our money. Well, the FDIC was started by Franklin Delano Roosevelt, and this president, when he introduced the FDIC at the beginning of the Great Depression, he said, "We want you to put your money back in the banks, and we will insure your money because the banks want your money to work for you." That's what the American president Roosevelt said, to get Americans to go back to the banks and put their money back in the banks. And it took a long time for Americans to trust banks again.
Yeah.
And there's still a lot of problems. Many Americans still don't trust banks.
Yeah.
But an account is how you can gain interest, but there are different types of accounts. Who can name one of the types of accounts you learned about yesterday or that I put in
Checking
the
and saving.
vocabulary list?
Checking and saving account.
Checking, savings. Now, what
Mhm,
about a
saving.
few of these? Let's get some hands. Who could raise their hand or put up the emoji?
Individual
Individual
retirement account.
There you go. IRA. There you go. Individual retirement account. Beautiful. So there's two more here.
And
And let's just,
It's
this
like
word retirement,
41K,
No, ça c'est
401k,
deposit. Yeah.
CD.
41K.
All right. I'll explain a
Some money
401k in a little
there,
bit.
and 10 years
Let's
later,
start with these three. Here we go.
Teacher, CD mean what?
That's a good question. Who knows?
Security deposit.
Certificate deposit. Yes.
Certificate.
Certificate deposit.
Certificate of deposit.
yes,
Yes.
yes.
Certificate of deposit. Now, we know what interest is, and we want to invest our money. So I'm underlining the word invest, where there are different types of accounts. I'm going to put a little star here, different types of accounts where we can invest and gain interest. So we all want interest.
Mhm.
Now, we want to make our money, basically think of it like this. If you have children, you want to make your money pregnant. Put your money somewhere where your money can grow. Get the money pregnant.
Yeah.
And make
Yes.
it work for you.
To the baby.
So, right, make your money have
A
babies,
little
have
baby.
lots of babies. That's what we all want.
yeah.
Now, Bruna said, in some independent banks would say, listen, we can give you a higher interest. We can give you a higher interest if you put our money here.
Yeah.
For a long time.
Right. So how does that work? How does a bank make your money grow?
They invest their money, this money.
Stocks,
The
they
bank
put
invests the money.
Beautiful, beautiful. Rosario raised her hand. So this is what's really fun about it. Your money, everybody's running in this picture. Everybody's running in to get their money at the same time. Why can't everybody get their money out of a bank at the same time?
the lower interest rate, maybe.
business goes out.
Well,
People take
banks,
it
yeah. If I want to go to the
No
bank and take
protection.
out, well, here's the concept of a bank. If I want to go withdraw my entire account, I can. The bank will say, oh, please, are you sure you want to do this? And I'll say, yes, I want to do this. And then they can give me my entire savings if I want to do that. But I'm one person. And then what if Rosa does the same thing? And then what if Rosario does the same thing on the same day? And then a baby comes by and says, you know what, I'm taking my money out too. What's going to happen at the bank?
the shortage
The
of money is
quiz,
there. The
the
shortage
bank
of
can
money.
have a
So bank
financial quiz.
increasing the interest rate.
No, I mean, can we all do it at the same time?
Yes, the bank can have a financial quiz now. They don't
You're saying
have money.
crisis?
Yes.
Ah, that's it. They don't have the cash. The bank
Yes.
will definitely not have cash for something like this.
Yes, because they invest the cash.
That's
No,
it. That's it. Your money is not all in the bank.
no.
Your money is actually in many places at the same time. So here's how this works, which is kind of fun. Let's say
But,
Patrick,
Well,
here's, was that Leonie or Katya?
me. How people give you money when you go to take the to get your money on the bank?
Well, Katya, I'm going to give you an analogy right
They
here.
have
So
to be restricted to give money, limited money to give us for the people. The bank decided to give the people just limited money, not more.
well, here's the thing. Patrick, you want to get a loan for a house. You go to the bank and the bank will say, all right, Patrick, you look good, you got a job, you got credit, you qualify. Now, where does that money for Patrick's new house come from?
From another customer.
Yes, exactly. Now, Katya, you have opened up a business account for your new business. Your new business is doing well. You're getting a lot of commission. So Katya's money goes in here. Katya, your money will go in here and you'll put it in maybe a CD, maybe a business account, maybe an IRA.
The bank give you some interest.
The reason Katya is going to put her money in the bank is because they'll say, listen, don't touch your money. And every month you can make interest. So how can the bank do that? How does the bank make money? The bank is going to make money because Patrick over here is going to be paying them interest off of his loan with his mortgage every month. So Patrick is going to give, say, interest. Let's say his interest is, he gets a good interest rate. Right now, interest rates are low. He gets like a 3.5% interest rate. A high interest rate for a house would be like 7%. He gets a good interest rate, and the bank is collecting hundreds of dollars from Patrick every month. And then Katya is getting her interest from her money. Maybe she gets a little bit less, and that's how the bank makes a profit.
Yeah.
By moving people's money. You give me
The
your money
profit
here.
is the difference.
Right. You give me your money here. I'm going to move your money somewhere else. And it's not just like that. The bank will take your money and put it in hundreds of places at the same time. We'll take a little bit of this money, invest it here, a little bit of this money, invest it here. Now, this is where the FDIC comes in. The bank wants to make money. They're going to say they care about you and they love you and you're important to them. They want to make money. So they're going to try to invest the money anywhere they can make money with your money. But the FDIC has rules and regulations. You can do this, you can't do this, because if you get crazy and lose everybody's money, the government has to pay. And if you want to keep your bank in business, these are the rules you have to follow. So that's essentially, Say it again, Abebu.
Can I ask a question?
Yeah, go for it.
In my country, we have the Central Bank of Ethiopia, like the control of all branch of bank. Here, FDI to control the rule and regulation, follow the only, and they have a different like central bank, like central bank or national bank they have here.
I think I want to ask a question right here. This will lead into breakout rooms. And it's a simple question. Do you trust banks with your money? Because everybody from everywhere in the world has a different story and a different experience. Do you trust banks with your money? So I want to hear from a few people. Do you trust banks? Yes, no. Let's hear from somebody who we haven't heard from in a while.
For me, yes, because there is some regulation in the system, financial system.
No.
Yes, because we don't have any choice. It is easier and convenient. I trust to bank.
Okay. Abeba says she wants the service. I want that service. I like taking my card, getting money when I want. I don't want to keep money under my mattress at home. I want the service of a bank. Now, Katia, you said no. Why no?
Why?
Katia?
Because we don't know what will happen like in the future. I say future, it could be 2 weeks, 2 years or more than that. The market. I'm not going to talk about market, but the thing that happened in the past can be happen again.
Yeah. Like this, like what's happening behind me.
Yeah.
You're saying this could happen tomorrow?
This could happen. You don't know. This could happen tomorrow. It's what's going on now in the when people invest money in the market. You know, the how do you say the market, like not money, like I don't remember.
Cash.
Like,
you think about cash?
Not cash. Let's.
I'm not quite sure what you mean.
Okay. Like cents, bitcoins.
You're talking about many different things. Well,
I think you're talking about the bank, but I go over there. But
you're talking about these different kinds. Here's a vocabulary word. So what Katia is talking about, something that you're not alone. A lot of people don't trust banks. They don't trust government. They don't trust systems the way they are. So they look for different types of investment.
Stock market?
Well, these are all different types of investment. And I think when you mentioned cryptocurrency, that is an unregulated investment. It's not regulated by any government.
No.
Okay.
Correct. So that's why a lot of people like it, because the people who don't trust traditional investments look for non-traditional investments. And there's, of course, more risk in non-traditional investments.
Yes.
Or unregulated investments.
It's not protected.
But I think before we go to breakout rooms, I'm looking at the names of people here. The question, do you trust banks? I really would like to get Ruth in here because Ruth, you're from Venezuela. I think your opinion is really important. I don't know if you're in a position where you could talk right now. Ruth, are you with us, Ruth? Can you talk at the moment?
A little, teacher.
Okay. Tell us about your experience. You're coming from Venezuela, where this is a huge panic. People cannot trust banks. They cannot trust their own money. Well, what about you now being in the US? Just the word is trust. Do you trust banks? It's okay. I think you're not in a position where you can talk right now. No problem. I'm gonna put everyone in breakout rooms right now. And that's the question I want everybody to ask. Do you trust banks? Yes, no. And what are the reasons why? And everyone's got a different story from a different part of the world. Everybody ready?
Yes.
Yes.
Okay, here we go. Breakout rooms. I'll do 3 breakout rooms. Okay, everybody can join the breakout room. Mhm. Don't. No.